This is Trend Following Radio, where great thinking comes alive. Nobel Prize winners, legendary traders, best-selling authors, and the pros that know what drive us irrational human beings. I am your host, Michael Covel. Not filtered, raw, honest. That's my passion. Today on the show, I have Howard Lindzon. Howard of Wallstrip fame. Howard of StockTwits fame. An angel investor, a VC, runs a hedge fund. Has, as far as I know, has always had a fondness for trend following as well. I hope you enjoy. So yeah, I'm currently. Last year I came to Asia to give untold number of speaking opportunities before mutual funds, hedge funds, sovereign wealth funds, and I was all over. I went about 8 or 9 countries, and honestly, I had the most fun in Vietnam. So I stayed for the last 6 months of last year. Came back to the States over the holidays, and then came back this year.
Nice.
Have you been to this area of the world? I'm assuming you have.
I have not.
Really?
I know.
You know, given your VC penchant, your angel penchant, I have to tell you that the Vietnamese are very entrepreneurial and they are very tech savvy. It was that little app a couple months ago, the one guy that really took off. I'm not much of an app guy, but they're really it's really interesting. But
yeah, I'm too old. I figured
you're my age. Hold on, you're my age. Come on.
I don't want to learn new tricks and new countries. And I've done a couple of investments in Israel, and I never thought I would do that. That's it.
Okay. So listen, here's my first question that I was thinking about out of the gate. You know, you've done a lot of different things, but when I look at the VC world, the angel investing world, and I look at some of the strategies that I've written about, I see a real commonality in that essentially diversification is the only free lunch, and who really cares where you make your money? Now, of course, you have your things that I know are near and dear to you, but that diversification is clearly a common thread. Yes?
I think, yes. I mean, I think you could argue that I'm over-diversified because, you know, I've invested in 100 startups. I have my home. I got a hedge fund. I've got, so I mean, I got a lot of stuff, a lot of investments. You know, when it comes down to stocks, though, I don't love to own 50 stocks, you know, so I'd like to own maybe under 15. Otherwise it gets a little hairy because those, you know, when it's liquid, I feel like I shouldn't be owning that many things. With the illiquid stuff, I think I'm just a sucker for a great entrepreneur and a great product. And, you know, from doing that as a business, you know, my job is, you know, if it fits the criteria and you have the capital to invest in it as my career and job, then invest in it. Whereas even though I'm paid to manage other people's money in stocks, you know, even in a bull market, if there's like more than 15 stocks in the portfolio, it's like sell one to buy the other. So it's actually, I'm diversified in my private investing, maybe because it's more risky, but in the public markets, I try and control that a little better.
So as you mentioned the word entrepreneur, and clearly I think anybody that looks at your bio realizes that entrepreneurism runs deep, clearly in your blood. Trace for me. I don't know your full background. So when did you get the bug? How did it happen? I mean, I can look at publicly, I can say, and I would love you to expand on this, but I know Wallstrip was a big personal and career start for you. But even before that, what were you like as a young man? What was driving you?
I wasn't that motivated. I grew up pretty wealthy. So I think what motivated me was seeing, you know, I grew up in a Jewish community, good school. A lot of kids driven in school to be, so I think at first around me were a lot of lawyers. Oh, you had to go to lawyers, you had to be MBA. And so actually I was a late bloomer to the entrepreneurial thing. Probably in late high school, I started a car wash business. I just like the freedom of getting paid my own cash. And but my first real taste was late. I graduated school in the U.S. at ASU in Thunderbird, and I needed to stay in the United States. So I had to just take a regular job, and that was to be a stockbroker. This was in '91, and I hated it. I hated the whole idea of having a cold call and use the phone so much. You would read the paper to try and find rich people to call or people that were interesting to call. And I called this guy who had started a product called The Grip. And within 2 weeks, I was down in his office investing in his company, and that's when it started. You know, he had a product called The Grip. It was tension wrap birdseed and balloon. It became the pet rock, not that we didn't really know it. It became a pet rock on QVC and was in the QVC Hall of Fame. But when I saw that product and held it and saw how much help he needed, I was hooked. And didn't have the money to write the check to him myself, but I begged and scrounged up a little bit of money on my own money, and off we went. I think that product sold over 40 million units. So from there, that was it. School, forget it. So I was a late bloomer, but I was in my mid 20s. But once I got the feel for it, that was it. What a waste everything else had become.
I can still remember how much excitement was built around Wallstrip. I mean, it was a terribly interesting concept that you launched, because it just took off and everyone knew about it. I don't think everyone knew exactly what was going to happen in NVIDIA. No one could have predicted all that. But everyone, when Wallstrip hit, I really think most people involved in finance were just like, wow. How did that unfold?
Good question. I think it unfolds part entrepreneurial, part hustle, part closet comedian. I did stand. I grew up in Toronto, so I grew up amongst the best startups. So I used to sneak into clubs. When I was 9, I would listen to comedians on the radio during Blue Jay games in Toronto, right? Like, it was comedians and Blue Jay games. I was kind of a loner kid. And so I guess I was a closet wannabe comedian. And so, yeah, Jim Carrey, you had Mike Myers, you had all these guys in Toronto, young kids at Yuck Yucks. So I used to sneak in. Then I used to do open mic nights. And the hardest thing I've ever done still to this day. And I plan to go back and doing it. But, you flash forward to my business life, and I was inspired by this investment that I made, a company called Golf Now. And they were killing it. It was basically the open table for golf. Living in Phoenix, put in a bunch of money. The company was just one of those companies that you knew was going to be a success. And I used to get in arguments with the team saying, we have the hardest part of this business solved. We have people coming to the website, pulling out their credit card and booking tee times for golf. You know what else they would love? They'd love to watch golf videos. They'd love to see the scores of the golf matches. And my partners at the time looked at me and go, "You're nuts. Why would we waste our time giving away stuff that doesn't make any money?" So partly to prove a point, partly because YouTube was coming along, partly because I was getting into the social web and meeting interesting people who were blogging about how to build this stuff, and partly because I hated CNBC and TV in general, and how I used to, as smart people, I think you've been around smart people, we end up talking to the TV going, "Well, that's the dumbest thing." You end up being your own commentator to the TV. And nobody hears you, but you're talking. So I came up with the idea, and I pitched Fred Wilson the idea of a 3-minute stock show. And Fred, of course, had started Street.com, so it wasn't like I was pitching some clueless person. And so he knew Kramer really well. And Fred Wilson had actually been chairman for like a month or so of the company and all the transitions in 2000 to 2003. And Fred loved it. He goes, "Do it." I didn't even have a full show idea. And so he gave me a little bit of money. I think it was $50K to be exact. And then gave me a phone list of very successful investors that I didn't know any of them. And I just started calling away, raised $600,000 before our first show was made, put an ad on Craigslist, used the web to find the rest of the talent. And we made our first show in late 2006. And I don't think the show was ever fantastic. Obviously, there were some really funny ones. I just think it was so different and so unique in the way we were picking one stock show a day. And more importantly, for people starting a business, it wasn't that we were getting hundreds of thousands of views. It was that who was watching us mattered. And I think this really matters in businesses. You know, it's one thing to have a viral product, but it's also important to have the right people using or the right people watching, because their influence matters. And I think Wallstrip was a really influential show because it showed all these media execs what you could do with the medium. And so we were never that popular, but we were popular with the right crowd, and CBS ended up buying us 8 months later.
Yeah, that buzz viral aspect that it had, you can't pay for that. It just kind of went.
I don't think you can pay for any of that stuff. I mean, the WhatsApp guys say the same. I think PR, and I think the hardest thing about it and why, I want to do something else creative on the web, like really creative, but I'm tired because the web, what makes the web hard is you make the show, but the hard work starts after you make the show. The TV industry's set up so the actors show up and everybody shows up and everything's planned and they fly around the world and the paparazzi set up. And so there's a method to the whole thing. They got Letterman, they got the late night shows, everything's dialed in. You build something on the web and you put it on the web, and now you got to come up with how to get people to watch it. They don't just come.
Yeah.
So I think that's what made Wallstrip different too, is that we learned, I ended up investing in a bunch of companies that helped do the things that CBS, ABC, NBC do for their actors and their content. So I think the most important thing to me from making the show was what I learned about web distribution. And it was early days, so I ended up investing in, for example, a company called TubeMogul, which helped the company gather up all the analytics of where the show is being watched, who is watching it, how to spread it. And that's a big company today, a company that will do $200 million in sales. So it led to all my other investing for the next 4 years, because by making the show, and this is for every entrepreneur, the best ideas come while you're doing the thing that you love to do.
While you're doing what you love to do, it's those funny things that happen on the way to the show.
Yes, while you're there, while you're building something, you go, this could be better. And then you find out someone built that, and you go, well, that's the thing that'll make money. And then you write a check for that. And so, as along the journey of, listen, if I had done Wallstrip for 10 years, I'm sure, and it was good enough, I'm sure that's what I'd be doing, video. But because I knew I wasn't a celeb, and because I didn't want to be an actor, and, this was an experiment almost in finance, I started investing in all the things that helped make the show. Because I figured millions of people would want to do that stuff. So I just used everything around me, and I pyramided into a huge trend, and I've parlayed that kind of stuff. And I think anybody can do that. I don't know if everybody can make a show, but everybody can put themselves in a position to be at a great company or to be at some kind of groundbreaking thing. And then if they have their eyes open, they're gonna spill into something great. Now with the stock market, as you know, same thing. There's so many opportunities. Once you find a strategy that works for you and then you start filtering, then all the opportunities come to you even easier. So I think they're very connected, and that's why I like doing both. I think, we can get into it later, but the most exciting thing about today's world, 2014, is all this data from the early startup world is very connected to all the public price, the big data, which is the price and volume of the stock market world. So I think understanding both ends of the spectrum really gives you a good feel for trends.
Before I shift into, you kind of used the phrase groundbreaking, and I want to shift into something. I mean, look, you have this big hit with Wallstrip, and then you've moved into something that's even bigger. But I would love for you to expand, because I think sometimes maybe other would-be entrepreneurs, before they've hit it big, so to speak, or knocked one out of the park, they might want to know what you're thinking about. And I'm guessing you probably don't think about them on any kind of ongoing basis, but I'm sure some of your biggest mistakes were things that helped to grow you, so to speak, even farther? I mean, I wonder if you would comment on what you think might have been some of your biggest mistakes, if not one big mistake.
I think my one big mistake, I worry about it, so that means it could be still ahead of me. I've never had that. I've had this one big moment where the life was ending, where between my wife and some good people around me, we pulled through in 2002. It was a moment. You get a lot of smart kids around me. I love the market. I was running a hedge fund. 1998, I started in 2002 after surviving what we thought was the crash and kind of sitting back laughing, going, wow. I mean, we really, as young kids, learned a lot there. I found out my partner, who was running our brokerage firm, was stealing. So all of a sudden I go from, oh my God, I got this great fund. Everybody trusts me because we survived the crash. We were in cash. We weren't bullish, but I didn't know what we were going to do, but I knew we'd survive with a good record intact. And then I wake up one day and realize that my whole firm was a fraud because this one guy, Scott Tominaga, who we had hired to be our NASD, he was our CFO, was using our Air account to profit and covering everything up. So he would put good trades in his personal account and the bad trades in the Air account. This is a simple explanation. And eventually the bank wanted their money back. They should have wanted their money back when the Air account got to 20 grand, because that's what happens at a brokerage. And he had run it up to $7 million. And so now I'm on the hook for $7 million. Not me personally, but the firm. So we go from being on top of the world in our little world to realizing my partner is a sociopath and had been stealing. So that was, I don't know where, there were so many mistakes. I don't think you can predict one mistake, but that moment in time is where I started making some good decisions and growing up. And the first decision was calling the NASD right away and saying, Houston, we have a problem. The second was calling my wife. Third was calling a bankruptcy attorney, and the fourth was calling every client saying we have a problem. And I think by calling all the clients, and that came against good advice from a lot of people around me, was the difference. So it wasn't so much one mistake, it was a series of obviously poor decisions. But I think it was the opposite. It was doing the right thing at that moment in time that set me on a better path.
How did that affect you going forward, taking on new partners or working closely with people? How did your antenna go up differently going forward?
To this day, I work at home in an office. I mean, I trust first, but it's definitely affected the way I run business. Everything's become just, I don't want to be involved in businesses. I want to invest very early when there's 2 or 3 people. I mean, it probably frames the fact that I want to set up the documents for the company. I want to be the first money in. I know that craziness will happen after, but if I get in early enough and I see the documents, it's why I don't invest in small caps either. I don't trust the books. I want to know where the contingent liabilities are. So I've become one of those investors that either writes the first check with a group of guys or invest in tremendously liquid public companies where I know they're overvalued or whatever, but I'm just trading them as emotionally against everybody else. And then, so I think, with respect to setting up a large operation, I just don't have the skills because I either distrust myself or the people around me enough to know that scarred me for life.
It's back in the late 90s, one of my first businesses, I ended up spending almost the first 30 grand a corporation made defending a lawsuit against a partner, and that he then dropped and then disappeared. But that definitely affected how I looked at things too. You just realized I don't want drama. It's like the no drama rule. Please don't bring me any drama. And that became
very true. So until 2002, until the end of 2003, whether I was popular or not, I was the center of the drama. If there was an anonymous app that was around then, it always said, Lindzon is a dick. He loves to be around drama. If you ask Howard how his day was, he'll tell you, I guess, was what my therapist would say. And then I learned after that, if someone asks you how your day was, you're just supposed to say, great. How was yours? And so those little tips have carried me for the last 10 years. 11 years. To be honest, I mean, that was that simple.
Yeah.
So I don't think it was anything. So now I just do less dumb things. And when I'm in trouble, it's generally because I'm selfish. And those can be fixed because I have awareness about how awful it was back in 2002 to know what was going on in my life. And again, wasn't in a war. I wasn't, didn't have cancer, but I mean, my life is over in many ways.
But you don't regret those. I mean, it's sucked while it was happening, but I'm sure you look back and you said, you know what? Those scars gave me something else.
Yeah, I mean, they could have been worse scars, is what I'm saying. I think I made a couple good decisions. Everybody's, internally, I just felt like such an idiot, and I was expecting the newspaper to come out and say Howard Lindzon's an idiot. How could he let all these things go on? But it was small, and we had a great attorney who somehow, luckily we had fraud insurance. I mean, everything kind of went right from that point on, as right as it could be. And, I sat in a room for 2 years, just getting my confidence back, investing a little bit in a friend's office. And that gave me you spend enough time alone, you come up with a lot of ideas. And I came out of there really, just by staring at the markets and thinking through my own little portfolio. I got my risk game back on, and I've made some good decisions.
It's funny you mentioned that alone thing. I think our generation and older folks are lucky that we maybe came along as this online revolution was starting, because I think we are maybe better equipped to deal with distraction. I see some people today, and I sometimes wonder how younger folks today, clearly many that are very, very successful and bright, but I think distraction is a hell of an issue for a lot of people today.
Yeah, I think I would be unemployable pre-internet. I mean, that's so dumb. Like, I went to a great graduate school. They offered me a job. I got a job offered in 91 before I became a broker by Intel in purchasing. What kind of idiot doesn't know enough to take that job for $60,000 a year? I'd be a bazillionaire. So I didn't understand anything about the internet, computers or hardware. I wasn't wired that way. But with the internet, what came to me was I could talk to anybody. I had game enough to be humorous and climb my social ladder, if you will. So it was like the world opened to me up with Google and with the internet and email. I'm not much of a phone person, and I'm not much of a get your hands dirty type of person. Those are all things that I carry obviously from way early in my life. So I've managed, the web has really helped me find myself, and that's where I spend most of my time.
You talk about that alone time, and after all these things happen, at some point in time, you had a light bulb moment. I don't know if it was you alone or with other people. And I saw an explanation, and you can tell me if I'm wrong, but essentially you were looking at Twitter and you said to yourself, this is delivering news faster and more accurate than something like Bloomberg. And it just kind of germinated from that initial observation?
Yeah. It was immediate. It was, when we sold Wallstrip, I don't know how much time we have, but I think there's 3 events. And the confidence builds over time. And the same thing happens in markets. You get a little confidence, and you get a little more confidence, and you see the markets start going up, and then by the end you think you're smart, and then you lose it all. So I'm always applying that to the startup world too. We were in 2005. Let me just take you back a little bit to 2005. The event that changed my financial life and my confidence in investing was a bad investment that I made at I think an hour before the market topped in 2000. I wired $250,000 from my hedge fund to a company called Viva.com. It's the genius idea and Viva.com wasn't even the investment. I was investing in a company called carsdirect.com for the privilege. You had to invest in the three-legged horse. You had to invest in this three-legged horse for the right to invest in a horse that had 4 legs. And the 4-legged horse was rent.com, which was selling cars at a negative gross margin. Genius. And the 3-legged horse was called Viva.com. Invest $250,000. The market goes down 10% the next day in March 2000. This $250,000 is the dumbest money ever spent by a young hedge fund manager. And lo and behold, at Viva.com, Cars Direct, 9 years later, goes public under Internet Brands, and I get 10% of my money back. So it was a 10-year raging success to get 10% of my money back. But the three-legged horse changes its name to Rent.com. Scott Ingram, who's an incredible CEO and a good friend of mine now, who I only met once, puts his own money in, gets a bunch of real estate guys to put money in, and 5 years later sells the company to eBay for $450 million cash. So it gave me it gave me a nest egg to play with startups. So that was my lucky moment. I didn't know anything about it, but I learned that if you want to be in the internet business, inventory, using the web to manage inventory is a hell of a business. So as luck would have it, into my room walks a guy selling me a pyramid religion play, which I wasn't interested in. I said, but I know your son runs an interesting golf company. Can you tell me about it? So he told me about this company. It was called Golf 602, and it was a way to help golf courses sell their tee times last minute. And I go, well, that's the exact, in my head, I'm going, well, that's Rent.com, but for golf courses. And we sold our house. I made my wife Ellen sell the house. We put everything we had into this golf business, and that was my big move. And I got all my friends to invest in this golf company. And a few years later, we sold it to Comcast for a lot of money. So that was my first big, move the chips in, where I made my friends a lot of money and myself gave me the confidence to move on. And during that fight, when we started Wallstrip, now at CBS, who now owns Wallstrip, now we get to the point, I would come into the office and I'd say, guys, CBS, Wallstrip's just the national anthem. If we deploy, once I saw Twitter, I go, so we have everybody watching the national anthem all over the web. If we send everybody back now to the stream, the ticker stream, we'll control finance. And CBS looked at me like I was crazy. So I bought myself out of the last few months of the contract with CBS and called Fred Wilson. I said, Fred, what do you think about this idea? Shouldn't Twitter do it? And he said, they'll never do it. And so we started StockTwits.com. And StockTwits' idea was, hey, let's be the Twitter for finance.
Where would you put, in terms of how you envision StockTwits unfolding? Did it go exactly as you expected? And how would you define it and place it today in your own mind? What are your hopes and expectations even going forward?
Yeah, good question. I'm no longer CEO. I think I didn't break a cardinal rule, but I think the VCs and everybody knew when I signed up. I was like, this goes back to Scott, who stole from me and my firm, is that I got thrown into a situation that I felt was, a race. I think when you're doing a startup and you have a little seam, just like a football player running through a hole, you have to explode through that hole. And I think from a lack of operating experience, et cetera, I saw a lot of holes because guess what? The financial industry is full of holes. And I think still is. And the walls are coming down and the holes are being run through by technology, and rules are being ignored as they should, because if you ask for permission in the financial industry, you will not get it. And I'm inspired by, let's say, Robinhood, which I'm an investor in right now, which is going to launch a mobile-only brokerage app, which is coming 10 years after I thought it should come. You have AngelList, which has helped shape crowdfunding laws, where you can push a button and invest with great investors in private deals. Not that that's for everybody. So I think you have the first time ever Silicon Valley really has Wall Street in its sights. It may be still another 10 years, but the first time ever Silicon Valley is interested in Wall Street. Twitter, surprisingly to me, never really cared about Wall Street. And my big argument there is, oh my God, if there's two companies that should never be allowed to look at a Twitter stream, it's Reuters and Bloomberg. That would be my advice for Twitter, because those are the two companies that would pay the most by not having it. Because like you said, news is breaking on Twitter faster than it could. You could have 7 billion employees at Bloomberg. Twitter will break the news faster.
But these shows still exist. That's what's amazing to me is and I don't know, I mean, obviously the viewership I think has gone down, but they still hold these these pole positions. They're still on there blabbing away. And like you say, Twitter is faster.
Twitter's fast. They're blabbing away, but as you said, Bloomberg loses a fortune on TV. At least they're good people. I like Bloomberg. It's better product. But it's not in their interest to do anything super interesting because it would wreck the terminal. I mean, they may not say that overtly, but hey, that's the rule. Mm-hmm. And then on CNBC, I don't think they have a clue. I've said this publicly on my blog. Here's what goes on there. You've got Comcast worried about cable. Comcast is a behemoth. CNBC is a speck on a fly's ass, right? So it's like the show. It's like they can get away with anything at CNBC as long as they post a profit. That's Comcast. When they report up to the top, it's like, oh wait, there wasn't a fire set to the rest of Comcast. Go ahead. About your business. So Maria Bartiromo wants to leave for $4 million or whatever it is. Hey, more money to party inside CNBC. Give it to young. They don't care about. All they care about is ratings, which is the wrong thing to care about. Thank goodness the system is broken. They have the comfort of being in the Comcast umbrella for getting distribution. And it is the most rotten organization. I mean, there's some great people there, but it's the most rotten idea for a business station. We all know this. It's getting worse. And I think by the time this is said and done, here's my prediction. And we hired John Malloy to run StockTwits, and he produced Fast Money for the last 7 years and was a Bloomberg guy. In the end, the stream will control this. Either it's on your phone or an aggregation of the stream because it's user-generated content. And sitting over that will be, whether it's a Google Hangout or WebRTC, 24/7 conversations with traders that you actually want to see. You may pay $99 a month for that. You may only watch it 10 minutes a day, but eventually be on demand with great traders talking about what's exactly you feel like trying to understand. And CNBC will be gone just by the onesie twosie attacks at them.
Yeah, I think there's no doubt. And as I stumble into my little experiment of a podcast 2 years into it with a couple hundred episodes, there's no reason anybody should pay attention to my podcast when there's these major networks with all this broadcasting power, but people do, and that there exposes, even on top of how you're analyzing it, it's just not a good system.
Well, people want to be mentored. The reason the social web works is because it's like the Peloton, and we watch Tour de France, and do we really understand what we're watching? We're watching these guys draft. That's what helps them get through this race most of the time, other than the time trials and the hills. The rest of it is the skill of drafting. Okay, there's skill. It's not like you just show up in a Peloton and survive. It's hard. But same thing in the social web. It's who are you following? How closely are you following them? There's a strategy of riding the social Peloton, and anybody can learn it. Okay, it's not easy, but you can piggyback off. You can go follow me on Twitter and find out who the people I'm following and build your own list. You can just, I call it social leverage, but there's all these ways to leverage yourself and slingshot yourself forward. And TV was a wall, a giant wall. Bloomberg is a $2,000 wall. The Chinese are not, listen, Bloomberg could dominate here forever. They're not going to, the Indians and the Chinese are not going to pay $1 for Bloomberg. And Twitter only prolonged it by selling the data to them. Okay. So again, all these mistakes that aren't getting talked about are going to prolong the legacy of these companies, but it makes it harder for entrepreneurs like you and me. But good content matters. If I go on CNBC, they would never give me this amount of time, and they would never ask the questions that you're asking. And so you would never really understand, who is this idiot and why is he wearing makeup? That's generally what you'd walk away with CNBC. Or they'd see me and go, maybe turn up the volume 5 minutes into an interview on a 6-minute interview. So it doesn't work. It doesn't work.
You would appreciate this. So I was giving a presentation in Beijing last year, and I was in a green room, and I thought they were introducing me to, I was the only white guy there completely. I mean, they were great, and I was in this green room, and I was ready to give a presentation to 700 Chinese with a translator, and they introduced the group that had me to come speak was the Bloomberg competitor in China with a 10 million user installed base. They basically took the Bloomberg concept and copied it. And so they introduced me to this guy, and the first thing I looked at was his shoes, and I thought he was the grip. I thought he was like the camera guy or something. And I said something stupid, and then they corrected me, and he was the CEO of the firm worth $3.5 billion. So it was, but I think I got away with it because he wasn't speaking English. But you're right.
They have their own Bloomberg. Okay.
Yeah, they do. I mean, it's two different names, Great Wisdom / DZH, and that's the direct Bloomberg competitor in China. And it's brilliant on their end because they just basically said, hey, look, we're not going to let this particular, and other businesses too, we're not going to let this particular established business come in and take our massive population. We're going to do it ourselves. And boom, they do. So
I love it. And you got to think at some point in Bloomberg, the story will never get written, but I absolutely know that if I was thinking about it, Bloomberg was thinking about it. And I got to think there was a moment in time in 2007, 8, and 9 that they sat there going, fuck, we're going to be disrupted. I mean, once people figure out inside the Bloomberg that they can, chat and get the news in real time and partner up with all these same people outside the wall, this game is over. And they've managed, a great company, Bloomberg, in many ways. So they've managed to smartly get that data inside the walls. I still think StockTwits, I didn't get a real chance to pimp StockTwits. I still think StockTwits is that place where people who love stocks and markets will go. But yeah, the playing field it's been so hard for us. You asked a good question. And it's like, are we where we want to be? I mean, I think we've survived, and I think we're starting to thrive, but it's definitely taken longer, 5 years than I thought, based on the amount of money we raised and the timing. But I think the next 5 years are going to be uber exciting around finance. So I'll leave you with some facts. StockTwits volumes are just exploding. People are behaving. What we felt is curation mattered, and curation's in the eye of the beholder. But we're very, very tough around curation and mood. And then, most importantly, big companies like Google are investing in this. You get your iPhone, you get your Apple iPhone, and it's a simple app that everybody has exposure to. It's not Bloomberg, it's Yahoo charts, and it's basic price information. And then you have this younger crowd on mobile. They're not beholden to Schwab or Ameritrade. And then you have Google starting to invest in financial businesses. So the attack is on. Wall Street can be in denial. Great. Appreciate it. But what's happening is Wall Street guys are moving out west to work for some of these companies, and Google's starting to get that knowledge. And the next 10 years are going to be riveting around these old financial franchises. And that's exciting because it's just been unfair. I mean, if you really work on the inside of this at all, we realize how much they've gotten away with.
Yeah. You just said one particular word that any young person that's listening, and it's something that really hasn't dawned on me until just recently, but you said the word curation. And for those young people out there that maybe want to try and mimic your success, mimic your directions, be inspired, that word curation is really important, and I don't think it's going away. And we don't have enough time right now to keep talking about it, but I think if people really want to investigate, figure out why Howard Lindzon thinks curation is so important. I think it's terribly important too, but I think that's a great jumping off point. Let me let you end with where should we send people so they can go to StockTwits. Where else can they bump?
I think to read about curation, I think anybody who loves the markets, you can't do everything. And I think what makes StockTwits great is it opens you up to everything, but you got to learn like a kid in a candy store to find smart people. And you can if you behave, you can talk to anybody. That's the beautiful thing about the social web. Come say hello. Howard Lindzon, Lindzon. I'm at Howard Lindzon. My blog is Howard Lindzon. Everything about me is on the web. There's nothing dangerous about it because you know what? I love it. I'm not hiding anything about it, and I'm trying to peloton and slingshot my way to gains in legal ways. I think that, so there's two things that really you lead with. Curation, super important. It's the future. Verticalization is the future. Why try to recreate a Facebook? Obviously, if you think you're the next Bill Gates or Mark Zuckerberg, my hat's off to you, but you go do that. But everybody else, think about curation, verticalization, having some class and style, and use these tools around you. And it's possible. The tools keep getting better. And behave, right? Like, this is like no different than cold calling. Behave, say hello. Don't just take. So, it's so many people just listen. I'm okay, listen, you're allowed to just listen. Okay, you're allowed to just listen to me for months and months, but don't expect the first time you ask me for something to get something. So, it's just like all kinds of other social protocols. The financial web is about saying hello, saying thank you. The more you give, the more you're going to get. Treat it like a bank account, just a social bank account. The more you give, the more you'll be able to take. When I ask for something on Twitter or StockTwits, I get it because of years of just giving. And so that would be my last tip for people.
Howard, it's a cool journey. I wish you the best, and hopefully we can catch up sometime in person in the near future. You really got to make it to Asia. I have to. You're not too old. Come on now. You can get on a plane. It's not that far.
I got a 20 days. I'm waiting for Vegas to just have an Asia quad trip, and then I can make my trip to Asia. I've been to Japan. It is so foreign. My daughter wants to go back. We'll get over to Asia for sure. For sure.
Make it to Singapore. Get down south. That's it's worth taking a peek. So,
well, thank you for this. Let me know when I can spread the word.
Okay. Hey, Howard, thank you. And sorry for missing you the other day. My daylight savings time and how many hours ahead and all that nonsense. But I appreciate you hopping on this morning, and I will hit you back when it's live.
Okay. Thanks, Michael.
Thanks, Howard. I see a time when those awake will understand how to make money in up, down, and surprise markets. Whether new trader or experienced, college student or financial advisor, protecting against a crash or just trying to make a lot of money, trend following offers everyone an answer in uncertain times. To get started immediately, send me an email, michael@covel.com. I will send you the right trend following steps to take along with my free video. But if you want to buy and hold, trust the government and trust Wall Street, this is absolutely not for you.